Artificial intelligence spending is booming worldwide. More specifically, spending on data centers optimized for artificial intelligence is increasing even faster than the overall AI market spending. Two companies that operate in that industry specifically are Dell Technologies and Supermicro Computer. But which one of these two is the better AI stock to buy today? That's the question I'm going to answer in this video, comparing these two AI stocks across a couple of categories, including revenue growth and cash flow from operations improvements. I'm also going to compare their valuations, measuring them on a forward price to earnings basis, and conducting a discounted cash flow valuation for Supermicro Computer and Dell Technologies. We're going to do all that in this brief video, so let's get right into it.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
All right. When we compare revenue growth with Dell Technologies and Supermicro Computer over the previous decade, we see a big standout performance from Supermicro Computer. Supermicro Computer's revenue growth has exploded in recent quarters because of the factor I mentioned in the beginning of the video. Spending on data centers optimized for artificial intelligence has been soaring. Supermicro Computer, that's all it does. Its entire business is focused on that category. Whereas Dell Technologies, it has a segment that does that precise technology, but it also has the consumer-facing segment, which is not growing nearly anywhere the rate of the AI segment. So the other half of Dell's business is slowing down its overall growth. Supermicro Computer, in its most recent quarter, reported 143% revenue growth. I will say, however, that Supermicro Computer's revenue growth numbers are under question given the question marks surrounding its financial statements and the accuracy of its financial statements. Dell Technologies' revenue growth of 9.5% has been increasing, and now its data center business makes up a larger part of its overall business than it did a year ago, a year and a half ago, when that segment was not growing anywhere near the rate. Now, recent developments, you may have heard a company from China, DeepSeek, was able to develop AI technology at a fraction of the cost of OpenAI and its development, ChatGPT. And that development, that progress from China threatens this robust spending from companies like Microsoft and Meta Platforms and Amazon and Alphabet. They are the big companies that are spending in this category. 2 weeks ago, we got news from Meta Platforms and Microsoft, and they both indicated they were going to increase their spending in this category by the tens of billions of dollars. So they've already forecasted that spending will happen in 2025. That's not a certainty, that's a forecast, and they're signaling that their spending will be increasing. Those companies are reporting earnings this week and next week, so we'll get more definitive answers from the large tech companies surrounding their capital expenditures on data centers optimized for AI. Regardless, Dell and Supermicro Computer will experience significant growth in those segments. Supermicro Computer is likely to grow much faster than Dell Technologies. The next thing I wanted to compare these two on is cash flow from operations to sales. And in this figure, Dell Technologies has the clear advantage with 5.82% cash flow from operations to sales, whereas Supermicro Computer has reported negative numbers in cash flow from operations for several consecutive quarters. I've made videos about this, focusing specifically on Supermicro Computer and this negative cash flow, how just by itself, it's not an alarming sign because many companies that grow quickly and they sell physical products experience negative cash flow from operations. But what makes it concerning for Supermicro Computer specifically is the question mark surrounding their financial statements. That question mark about the financial statements in combination with negative cash flow from operations creates a red flag for me in terms of potential misrepresentation of financial reporting focused on supermicrocomputer. Again, nothing for sure yet, but a lot of question marks and red flags that I would like to see answered by supermicrocomputer and its management team. All right, so now let's look at valuation. And first, let's look at the forward price to earnings ratio. According to this metric, Dell is now more expensive than Supermicrocomputer, trading at a forward price to earnings of 11, compared to Supermicrocomputer, which is trading at a forward price to earnings of 7.6. Typically, you wouldn't see a company like Supermicrocomputer that's demonstrating north of 100% revenue growth profitably to be selling at these low valuations, but it's a combination of factors that's driven Supermicrocomputer's valuation lower. Dell Technologies has rarely traded at an expensive valuation. Its business is not a very profitable business. It's not expected to be very profitable at any point in time. Even if that segment that thrives from artificial intelligence continues growing, it doesn't generate profit margins anywhere near, not even 20%. The profit margins are near 15, 10%. It's a low profit margin business. And so these types of businesses don't attract premium valuations. And that's why you see them trading at, these valuations are less than half of what the average stock in the S&P 500 is trading for, according to these metrics. But that's just one way to look at valuation. Another way I look at valuation is by doing discounted cash flow models. And my DCF for Supermicrocomputer came to a conclusion that the intrinsic value per share is $109 compared to its current market price of $28. Now, my DCF assumes that its financial statements are accurate and that there's going to be no revising of their financial statements and the forecasts for free cash flow remain where they are. If there are changes that need to be made on their cash flow statements and the numbers were inflated and need to be brought down, then that will change these numbers and this intrinsic value calculation. For Dell Technologies, my intrinsic value per share came to $183 compared to its current market price of $103. Now, with Dell, we don't have those question marks surrounding its financial statements, so the numbers can be trusted more so than Supermicrocomputer's numbers, at least for now, until we get further verification of the discrepancy in Supermicrocomputer's numbers. So given these factors, which one of these two AI stocks is the better one to buy today? For me, I would choose Dell Technologies as the better AI stock to buy today because the red flag surrounding the financial statements for Supermicrocomputer brings me a huge risk factor that I'm bringing into this calculation, and that puts Dell Technologies at a big advantage. So that's the one I would choose today.
Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.